Let me introduce Malaysia Marine and Heavy Engineering Holdings Berhad. MHB is a leading Malaysian engineering company with over 50 years of experience, and it operates Malaysia's largest fabrication yard. The company's core businesses include heavy engineering, marine services, plant turnaround and maintenance, and new energy solutions.
So what is MFRS 8? According to Malaysian Financial Reporting Standard, define that the standard that deals with operating segment, meaning that the entity must disclose the segment information based on how internal management monitor the business. Specifically, operating segment is a component of entity that engage business activities that earn revenue and incur expenses. Second, has operating result reviewed regularly by chief operating decision maker. Lastly, has discrete financial information available for evaluation.
The Chief of Decision Making, which is CODM, refers to a function rather than a specific individual. This function involves allocating resources to operating segment and evaluating their performance. The person or group performing this role may be differ between entities. It could be Chief Executive Officer, Chief Operating Officer, Senior Management Team, or the Board of Directors. There are two examples of CODM that I will provide you. The first one is Muhammad Nazri Muhammad Noor as Managing Director and Chief Executive Officer of Malaysian Marine and Heavy Engineering Holdings Berhad, and Mr. Yong Pang Chown as Executive Director of Padini Holdings Berhad. There are two types of segmented report found in MHB Annual Report. The first one is Product and Services segment, and the second one is Geographical segment. I will explain about the Product and Services segment. There are two main business segments. The first one is Heavy Engineering. These segments focus on large-scale engineering projects such as fabrication, construction and installation of offshore platform, onshore structure, and also energy-related facilities. The second one is Marine. These segments provides ship repair, ship maintenance, vessel refurbishment, and also conversion services.
Next, I will present to you the second type of the segmental report. Here is the snippet of the geographical segment. As you can see, it shows that the group revenues generates most of its revenue domestically, and for non-current asset, is mostly located in Malaysia.
Now, let's discuss two key benefits of segmental reporting supported by a real disclosure from a listed Malaysian company, Malaysia Marine and Heavy Engineering Holdings Berhad. Segmental reporting helps users assess company's performance and risk by providing clearly on how each part of the business contribute to the company's overall result. For example, in the case of MHB, the company operates mainly in two segments, which is Heavy Engineering and Marine. When we look at the 2024 financial review, the segmental reporting allows us to see exactly on how each segment performed. The Heavy Engineering delivered a good result with RM3186.6 million in revenue and RM110.1 million in operating profit. Meanwhile, the Marine segment evaluates on how well it grows revenue and margin by leveraging a new energy trends and adapting to regulations. By showing this segment result, MHB provides a better assessment for the company's financial performance and risk, which making it easier for the shareholders to understand.
Segment reporting does not only show past results, it actually helps us to predict the future. Each segment of company works in a different environment. So, when the company report its segment separately, investor can use better and more accurate model to forecast a future cash flow. For MHB, the heavy engineering segments grows when the big project move to advanced stages. But in marine segments, it depends demands on LNG carriers repairs and ship upgradings to reduce emissions. This allow analysts to use offshore energy outlooks to predict heavy engineering performance and new marine fuel rules to forecast marine segments. So, summary reporting help investor make smarter and more confident forecasts about company's future. Alright, so let's quickly talk about MFRS 134, the standards for interim financial reportings. MFRS 134 is basically tells companies how to prepare their financial report in between their yearly financial statements. Instead of waiting 12 months to know what is happening, this standard makes sure we get updates during the year, usually every quarter. The idea is simple. Investors and users need timely and reliable information so they can make a decision without having to wait for annual reports. So, what does FAR570 requires? The company must prepare a condensed version of their financial statement, like a shorter or mini version of the full year reports. It usually includes a condensed statements of financial positions, cash flow, profit or loss, changes in equity, or selected exploratory notes. The report must focus on material changes that happen during the periods. For example, like big changes in revenue, expenses, or major transactions. So, FAR570 is all about giving timely, shorter, and more focused financial information during the year.
Now, let's begin with the first significant event. I will briefly explain the dispute between Kembangan Petroleum Operating Company and Malaysia Marine and Heavy Engineering. The dispute happened during the KBB offshore project. The KPOC claimed the MHB failed to meet the certain contractual obligation. Then, MHB argued that delays and extra costs were caused by client requesting changes and factors beyond their control. So, the KPOC sued the MHB for the defective supplies and initially claimed for RM93.1 million for the losses and damages. Later, in March 2022, the claim amount was reduced to RM58.8 million. Then, MHB counterclaimed for the outstanding payment and extra costs, while KPOC applied to reinforce it in High Court. As on 30 August 2022, High Court ruled in favour of MHB, setting aside the reward and rejecting the KPOC application. The case went into arbitration, and as on 30 June 2025, it is still ongoing with no final decision yet. Next is the case between MHB and Transfam Offshore, which called as TFO. In April 2025, MHB received a notice of arbitration from TFO, claims it suffered for RM57.3 million for the losses including unpaid work, delay costs, interest and other compensation. So, on 15 April 2025, MHB files an ex parte injunction to stop the arbitration, arguing the notice of arbitration was invalid. Then, the High Court grants the temporary injunction. On 5 August 2025, after a full hearing, the court set aside the injunction, dismisses MHB application and orders MHB to PRM 10,000 to TFO, and at last MHB made an appeal. MHB separate application to declare the notice of arbitration will be heard on 11 September 2025. The case is still ongoing. MHB faces a potential exposure of RM57.3 million if arbitration proceeds and it is found liable. The final outcome will determine whether the arbitration move forward or the case can be stopped at the High Court level.
Now, I will talk about the comparison of MHB's interim financial statement. First, we can take a look at the statement of profit or loss. For the current interim period, covers for 6 months, as at 1st January 2025 to 30th June 2025, while for the comparative, covers for 1st January 2024 to 30th June 2024. By comparing these two periods, we can assess whether the company's profitability has improved or declined. This includes analyzing revenue in changes, cost levels, and overall profit or loss trends. Next, the statement of financial position. For the current interim report, standing as at 30th June 2025, while for the comparative, 31st December 2024. This helps us identify movement in asset, liabilities, and equities. It also indicates whether the company strengthened its financial position for the first half of 2025 or face increased financial pressure.
In statement of changes in equity, both current and comparative period cover for 6 months, 30 June 2025 for current and 30 June 2024 for comparative period. Equity increased in both years, but in 2024, the equity is slightly better because the company generated more profit that year. In statement of cash flow, both period also cover for 6 months. In 2025, the cash flow is better because the company generated positive operating cash flow. But in 2024, the company generated operating cash flow was negative.
After the information that has been provided, we can conclude that MHB is a strong and forward-looking engineering company performing well in heavy engineering and marine services. Overall, the company shows clear potential for long-term growth and value.